Perfect. Right. Well, we should be live. Hello, everyone who is joining us today for this webinar on grant funding for your tech platform or software. I think we're waiting for just a few more people to join, so we'll get started in a second. So me and Tom were just saying that we're standing in for the people in the photos, having changed quite dramatically pre and post lockdown. I can promise you we are actually Harry and Tom. We've just changed a little bit. This talk is actually obviously part of Bristol Tech Festival. Fantastic week we've been having so far. I actually did a talk yesterday on MVPs and building the first version of your product for startups. And today, really excited to be welcoming along Tom from Granted Consultancy. And I'm sure Tom will introduce himself and a little bit more about Granted in a moment when we get started. But just a few housekeeping things to go through. We've got a resources pack, which you can grab by scanning that QR code or going to the link, and there's some really helpful stuff in there around a prototyping guide, as well as a list of kind of live funding opportunities that might be of interest to you, which we'll go through at the end as well as a project profiling pack, which Tom will talk about in a bit. Format for today is that we're going to obviously introduce ourselves and kind of set up the talk, but then hopefully we're going to have a bit more of a discussion. So I'm going to be grilling Tom on all things grant funding and how you can best set yourself up for success in that space. If you've got any questions, there should be a Q&A function in the right-hand side. Damien's already found that to say hello. So hello, Damien. But if you have any questions as we go through, pop them in there and I will try and add them into the talk / discussion as we go through. If I miss any, apologies, we'll definitely pick them up at the end. I think that's about everything. And we're pretty good for time, so we'll crack on. Tom, would you like to start just by kind of introducing yourself and Granted as well?
Yeah, thanks, Harry. Really good to be here and talking about what's a really interesting topic. So Granted have been running for over a decade now. So we've got a team of 30 kind of specialists who really focus on what we term non-dilutive funding. So that's where you don't have to give away any equity, you don't have to pay any interest on any debt. And we specialize on commercially focused funds. So that's kind of technology companies. And we're really at the kind of almost the bleeding edge of a lot of different technology sectors. So we understand the AI from the ML, from the blockchain, way before they kind of come into normal parlance. But yeah, really interested to talk about that today, and particularly with the focus on technology funds and projects.
Fantastic. Yeah, it's great to have you along. And for those who don't know, I'm Harry. I'm the founder of Unfold. We are a digital design and development agency based in Bristol. We work with a lot of startups and scale-ups. So again, on the kind of bleeding edge of new businesses and technology. And we do two things really. One is kind of user experience design. So we help people to create software which is more intuitive and easy to understand, as well as building kind of complex web applications and websites. So that's us. And then in terms of kind of the plan for today, we're going to look at what kind of makes a fundable tech software project. What are the kinds of things that do get funding? And we've got some examples from Granted in terms of previous things that we have had success with. Then we're going to get into the discussion around getting ready for grant funding. So I think there's kind of three bits to that. One is kind of scoping out your project and finding out what kind of is suitable for grant funding, the submission and kind of application phase, and then if you've won your grant, how do you then deliver that? So we're going to kind of talk about some bits there, and then we'll wrap up with some a look at what's actually available out there in the kind of funding space at the moment. And yeah, that's the plan for today. So I guess the first question then, Tom, is really, if I can find the right slide, which has gone, what kind of projects can get grant funding?
Yeah, good question, Harry. So I think the first thing to remember about grant funding is it's effectively a type of investment in your company. And when we're talking about the grant funding that we're talking about today, it's really that commercially focused, really innovative project that's going to be and apologies if anyone's playing innovation bingo at the moment, but it's going to be a step change, it's going to be disruptive, it's going to be really, it's going to put up lots of barriers to entry for other people coming into the market. And it's really about how are you going to solve a particular problem? And one of the things you've got to be thinking about are, why hasn't that problem been solved so far? Why is it that you and your team are the best place to do it? And why is it that you've got the right approach to solving that problem where maybe others have failed? I think the key thing to bear in mind, and I'll just talk through a couple of these examples, is that can cover quite a wide range of potential tech projects. So the first example there is eConsult. So some of you may have even come across them because they work with GP surgeries, amongst other areas, to help with the triaging of patients. And there's some really interesting artificial intelligence that sits behind that. They have, one of the key things you've got to put across in any kind of project is validating the need. So we speak to lots of people who say, yeah, we've built this great thing, and we've got a really good plan for building this thing, and everybody wants it. And with all of these applications, you've really got to validate any of the claims you make. So sometimes we're approached, for example, by organizations in the automotive sector, maybe, who talk to an OEM, i.e. one of the principal manufacturers, and have a meeting with one of the people at the OEM, and they think that is then their idea has been validated. What they maybe don't realize is that person at that OEM has 100 of those meetings every month. So what you need is that kind of actual validation of it. And eConsult here is a good example. We've won actually quite a few different funds for them across Innovate UK and SBRI, who funders will touch upon slightly later. But they were working with a couple of NHS trusts. And that way they were working with them, and that added a lot of kind of validation to their application. The second example there is an organisation called Play, who are a London-based development team, spun out of the gaming industry. So the Mushy Monsters and Mario Karts and those kind of studios. And they already had a version of their software Totem in the marketplace. They had the kind of V1, but they had some really interesting ideas around V2, looking at the way in which behavior change came across, how to identify employees who were maybe at risk, who weren't interacting with the organization, and that would flag those kind of employees at risk. So the point of putting them up is that, you can have something in the marketplace already and have proved and validated it in that way. And you want to do the next stage of that, the V2, the super ambitious project. And the final example there, Synologic, they work in the security industries, and they have a really interesting piece of technology, but their underlying technology is applicable to a number of different sectors. So it might be that you've proven it in one particular sector, and you now need to adapt it for a completely different sector. Maybe you're in defense and you want to adapt it for education, for example. And so that can also be a project where you're taking an existing piece, but there's a lot of work and a lot of risk associated with that work. And those are the primary things that you can get the grant funding for.
Fantastic. So with that then, Tom, are the grants kind of specific to each of those use cases, i.e. a first project, building on a second project, or trying to take something into a different market or segment? Is that kind of fund specific, or is that more kind of general when you're applying?
Yeah, so it can be fund specific. There's a couple of ways that the funders manage that. One is a thing called TRL, which hopefully most people here have heard of before, Technology Readiness Level, which is a system that NASA designed for understanding how developed an idea is. And you'll find that certain funders target certain TRLs. So kind of 1 to 3 is really fundamental science around an idea. 4 to 7 is then the prototyping and kind of MVP element. And then 8 onwards is really you're getting very close to commercialization. You'll find most of the innovation grant funders will target that kind of middle section of 4 to 7, maybe some of the later pieces, because that's where a lot of the risk is. You're not typically looking at the earlier stage pieces, which are normally covered by maybe academia. You're not looking at the late stage, you've proven it, so you're then taking it to market. It's that middle kind of valley of death, as it were, for the ideas, where you've got the idea, but it's super risky. And one of the key balances to get in any of these applications is the risk balance, because the funders want to see risky projects, because you can't have got the funding from elsewhere, otherwise it'd be a sure bet and someone else would have funded it, like an normal equity investor. But obviously you need to manage all those risks effectively, so it doesn't look like there's no chance of actually completing it.
Yeah, absolutely. Nice one. Right. Okay. I'm going to drop the slides down now and dive into the kind of those three things we talked about. So you're at the beginning of the project and you're getting ready. And I guess the first thing, certainly that we would do with a new project or client, is talk about objectives and kind of what is the vision for the project, because that's such a cornerstone of everything that follows from designing and developing that technology. You need to know where you're heading and what you want to achieve. So how does that kind of apply in the grant funding space, and what do kind of funders want to see in terms of kind of outcomes and objectives?
Yeah, it's about balance. So it's finding an output and an objective, a project objective, which is sufficiently robust. So you are aiming for a particular outcome, but that also allows you flexibility while you're actually conducting the project, because you might be partway through and realize that the planned technical approach that you'd started off with actually isn't quite fit for purpose. So you've got to build in enough flexibility to be able to pivot partway through, but also deliver on the key milestones that you've put to the funder in order to draw down all the funding. So again, it's about getting that balance right. I think one of the other things to bear in mind in that is the timescales, because these processes aren't super quick. So because they're looking for that really, the maximum ambition within your MVP effectively. So because of that, you might apply for a fund that closes, maybe we normally say it's 6 weeks as a minimum before a fund closes. So you apply for that fund, let's say in that example, maybe early December, you probably then would hear back after kind of maybe 4 to 6 weeks. So you're looking at hearing back, notification, maybe January, maybe February next year. And then there's normally a period of further due diligence after that. So we'd be talking now about effectively projects that would start in 6 months' time. And appreciate it when you're working with kind of innovators and entrepreneurs, they want something tomorrow, right? But the key point of that is that they're offering significant amounts of funding here for what will be really ambitious projects. So therefore, that's the kind of, the thresholds you've got to get over.
Yeah, absolutely. So you need to be really well ahead of your thinking in terms of getting that application in before that project kind of commences. I'm not sure if anyone else has lost Tom's video, but I can still hear you all right. So hopefully that will come back shortly. In terms of building out a team then, so do you have to have a team already in place? Certainly if this is the first iteration of a project or a product, you might not have everyone in place ready to go when you're thinking about this project for 6 months' time. How do the funders kind of see team, what's important to have, and how do you go about building one?
Yeah, that's a good question. Hopefully the video is back all soon. The key thing with regards to the team is that you know the team that you need to deliver the project. And obviously, if it's just yourself and you know you've got to hire 8 people, that increases the risk of the project not being successful, because hiring in itself is a risk. But if you've got maybe a core team of 5 or 6 people already, and you've got 2 or 3 additional roles that are maybe very specific technically, maybe very specific commercially, and you know you need to hire those, at the point of application, you need to know the description of the project and what they will be carrying out within it. But you can hire during the project. And then it's about making sure that you're drawing down the funds at an appropriate time as well, to allow yourself the time to hire the best people to deliver that.
Absolutely. And do you need like a track record of success in that team to be able to kind of improve your chances of funding?
Yeah, absolutely. It comes back to that validation point. All the time the assessors will be looking through this, and they've got limited time to look through the proposals. So they'll be looking for validation and evidence that you've got the right people in that can deliver it. So a good example of that might be if you've got a an existing organization that is developing hardware and software combined, but they're principally hardware focused, and your project is going to a different area, which is a software as a service model, they would want to see some reassurance that someone on the team had experience of commercializing software as a service, because otherwise you're going to be used, it's a completely different way of a completely different business model. So one of the ways that you can address that, which is possibly a good tip, is you can look at creating an advisory board. So that might be that you contact someone who's senior in SaaS, in that example, SaaS applications and commercialization, and they're happy to be on an advisory board. You don't necessarily need to pay them anything, and hopefully you get through large parts of the project without having to contact them. But for the funder, they know that if you need that help, you can just pick up the phone and speak to them.
Yeah, absolutely. It's I guess all about de-risking the project, which, regardless of whether it's grant funding or equity funding, like the people investing are going to be wanting to see how you're going to de-risk that project, and maximize chances of success.
Yeah.
Fantastic. So obviously, when you're applying for grant funding, one of the key things that you're applying for is to essentially try and create some intellectual property. And that can be really difficult in the software and tech space because you can't patent things. How have you kind of seen that play out in terms of what funders want to see in terms of IP, as well as how people can help protect themselves?
Yeah, you're absolutely right in terms of not being able to patent within the software sector. The first thing that the funders want to see is that you've conducted a freedom to operate analysis, so that if you go through this project and create this new thing, that you're not going to be infringing on someone else's patent or design rights, for example. And then, particularly if you're working in a consortium where you've got other project partners, there needs to be a very clear IP plan that sits behind it, that's agreed before the project starts. So that might be around licensing elements, about certain partners having rights to certain parts of the development and others to other parts of it. And then in terms of how you can protect it, obviously there are other approaches like the design rights piece, like trademarks, for example. Also kind of secrets, industrial secrets, which are a different way of keeping that knowledge. And that's entirely valid if that's, it works for Coca-Cola, right? So it can work for these kind of projects as well, particularly where you can't patent it.
Yeah, fantastic. It's such a tricky one. I mean, a lot of the time we are speaking to like early stage startups, and it's almost like first mover advantage and trying to be the first there, but that's hard to defend depending on what you're producing and whether that's then actually defensible.
That's exactly right. Yeah, and we work with quite a few. We've spent time working with partners, good partners in the right sectors. And we work with a lot of IP advisors who are used to working with early stage organizations. So therefore, they won't necessarily get a bill for kind of, 10, 20K, but they can do that first bit of FTO analysis. And then once they've got something defensible, they can then re-engage.
Yeah, fantastic. So speaking of seeing lots of early stage startups, one of the things that we see a lot of is startup decks and pitches and new ideas. And one of the key things that we see in those decks is kind of route to market, and also how big is the market? Because that's incredibly important for equity investors in terms of understanding what the potential return on their investment is. How about in grant funding? Do you have to consider kind of external factors and how kind of big the total addressable market is for the idea and the product?
Yeah, absolutely. And I think it's probably one of the areas that applications that we see, maybe need most strengthening in, is understanding truly what your market is. Often people put in a big number and a small percentage, and because of the big number, that still turns out to be a big number they're going to make a return on. It's less about the percentage and more how you're going to get to that. So there's three terms which are useful to look at, which is total addressable market, the serviceable available market, and then the serviceable obtainable market. And that's kind of breaking down, look, we're operating in this particular space. This is the complete piece, but actually our solution can address a smaller element of that. and we feel like we can obtain then a smaller percentage of that. And it's around then building strong commercialization plans, showing, for example, that you've spoken to key players in the market. You might have maybe letters of intent from key commercial organizations to show that, actually year one, those numbers are attainable. Because the other thing that everyone sees, right, is the classic hockey stick in terms of growth, which sometimes happens, but it's normally more complicated than that. And I think increasingly the funders would rather see a shallower increase that's well validated, well evidenced, and is going to happen, than an exceptionally overly ambitious hockey stick that is just kind of fairy tales past the end of year two.
Yeah, it's about seeing what is realistic rather than kind of pie in the sky. And I guess that comes down into kind of every aspect of the project in terms of, like you were saying earlier, if you're applying for too much funding than you need, if you've added extra fat on top of that, then the funders are going to take note of that and penalise you accordingly.
Yeah, that's right. And it's about being realistic and building from the, making reasonable assumptions and building on those. So again, kind of a piece that we see often is people say we're going to get a significant proportion of the market. Unfortunately, in these applications and for investors, significant doesn't mean anything. You've got to do the hard yards behind that of what that actually means in terms of pound value or percentage value of a particular market. Because if you do that work behind it, then that automatically kind of feeds into your business model and validates the approaches that you've put in there. So again, any kind of statement, it's more like writing for a scientific journal, where after every statement you've got to effectively say, right, this is based on the latest thinking in this particular area, and build it that way up, rather than maybe a marketing piece of collateral, which is about convincing, but doesn't necessarily have the time to put in all the kind of the facts and the figures. So it's slightly more weighted towards that kind of science journal.
Yeah, so really you have to make sure that everything you're saying is backed up and referenced by an external source, and to build that kind of credible case about why what you're saying is true.
Yeah.
And achievable.
That's exactly.
Nice. So once you've kind of gone through that process of applying and say you've been successful, and then it becomes all about the delivery of the project. And I can imagine there are some tricky bits in there. We spoke kind of before the webinar about the differences in agile and kind of more standard waterfall project management, and the kind of pros and cons of both. Agile being a way to make be more reactive throughout a project, not necessarily knowing exactly the final destination, but kind of reacting and changing to things in short iterative sprints and cycles. Whereas waterfall is more about this is the exact outcome that we will achieve, and these are the steps that we'll take to get there. One of the really difficult things with grant funding, and you touched on it earlier, is that the funders want to know exactly where they are gonna get to. But as you also mentioned, it's a very risky project by the case that someone hasn't necessarily commercially funded this. So things are going to change, and you're going to have to react to project as it goes. So how do you recommend people manage their projects? What are the requirements, and how can people best set themselves up for success in terms of project management and reporting for grant funding?
Yeah, it's a good and potentially often overlooked area. I think the first step is to make sure that you've designed the project effectively. So as we spoke about before about the objective, making sure it's deliverable, but also flexible in terms of maybe some of the component elements of that. As you say, the funders want to see a logical progression to that end point, but they're also happy for you to highlight kind of areas of uncertainty, and to put in the reasonable amount of time to address that uncertainty before then moving on. So you can apply it, that kind of agile approach, within a more structured project. The other piece is on the cost side of things. So we often have people who come to us and say, in this particular fund, its project size is up to 2 million. So can we put in a bid at 2 million or 1.999 million? And the key thing there is exactly the same, to build it from the ground up. if it turns out that you need, actually you need 600,000, for example, for a £500,000 cap project, then you can pare that back and get under the kind of threshold that they've got. But if it turns out you only need 350k, then put in 350k, because the funders are very used to seeing where you've added in the extra fat, as it were, just to get the cash. And it's better to be successful at 350k than unsuccessful at 500. So it's about building it up in a way that is logical, makes sense, and you put time into the thought process behind that. Because then when you come to actually run the project, it's going to be more straightforward, because it's going to be what you're expecting, and it's been worked through effectively. Normally, most kind of UK funders, the likes of Innovate UK, pay in arrears, so you have to work through typically a period before you can reclaim. So for ease of math's sake, say it's a year-long project and it's total 400k project spend, and that's equal amongst all the quarters. You'd work through that first quarter, spending out that 100k, and at the end of that, you'd put in a claim. Most Innovate UK projects looking at around maybe 50 to 70% of the project costs back as a grant. So you'd put in your claim for 70,000 at that point. That's normally paid relatively swiftly, and then you move on to the next quarter and work it through, and it gets paid like that. Certain funders have certain requirements for maybe accountants' reports or independent assessments of some of the spend that you've done. You're likely to need to keep evidence of spend, particularly for things like subcontractors, any capital costs, those kind of pieces. And if you've got a kind of a timesheeting system in the organization, then you can utilize that as well to provide the evidence. It's not onerous if you think about it and plan it properly. And I would say always incorporate maybe 10 to 15% of the total project costs as project management time. And that might mean hiring someone, or it might mean it's half of someone's role or a whole role. But just so you've built that in, it doesn't come as a surprise, doesn't impact on the actual delivery of the project for the rest of the team.
Fantastic. Well, thank you so much for all your insight, Tom. I think that's been really interesting to dive into kind of some of the areas around how to get ready for grant funding, and the top tips for how to apply. I'll bring up a slide with some of the kind of current funding opportunities now, if you want to talk to. But if you start getting your questions in, I can see someone's just submitted one. We will go through those in the last part of this webinar. So let me just find this slide for us.
Yeah, while you're just finding that slide, Harry, I'll have a go at that question if that works. So,
yeah, go for it.
Yeah, so just in terms of raising funds for research and development, at what level of early stage validation should you reach before pitching for funds? Without trying to avoid a definitive answer, it really does depend on the project and what makes sense, depending on who you're targeting. So, for example, you might be, let's say in that automotive example, you might have a signed letter of agreement, for example, from one of the potential buyers that say that you've spoken to, you've explained under NDA to protect the IP, you've explained the concept, and you've convinced them that if you build this new thing, that they would be happy to then take a look at it. It doesn't need to be that they will buy so many units of it, for example, but just that they are convinced by the concept, and it's more about reinforcing the need. So yes, they see a need in the marketplace for that solution. And if you were the guys to bring that together, then they'll be looking at it. In terms of kind of level of funding, they'll support any organisations with an asterisk of depends on the funder. They'll support any kind of applicants from kind of startups, spin-outs from universities, to established companies that already have something in the marketplace and want to develop something new.
Yeah, fantastic. I was just thinking from our perspective as well, we obviously produce a lot of MVPs, or we're working with people who have just produced the first version of a product. And one of the things we look at is how, for the kind of least amount of effort, or how can you maximize from what you've got the most amount of value and learning from your kind of initial product and getting it out there. And I imagine if you've been able to go out and just done something rudimentary or shown some initial traction when it comes to either equity or grant funding, you're going to be in a better spot, because again, you've started to sort of de-risk that project. I have found the slide, so I'm going to bring that up now. Here we go. Which is actually very small. Hopefully you can see that.
Yeah, it's worth just two seconds behind kind of the two types of funds which are highlighted here. So generally, when it comes to these innovation funds, there are either ones which are sector agnostic, like the smart grants at the top there, which probably most people have heard of, which are regular in terms of they're generally quarterly. They'll support most sectors, so you could be in defence or health or education, and they have a reasonable amount of pot. You can see there's 25 million there across all of those different areas. One of the positives of those is they're predictable, and it's likely that you can apply to them almost whatever sector you're in. One of the downsides of them is because of that, they attract a lot more attention and therefore more competitive. So that's one of the kind of the key things to bear in mind about those. On the flip side, very specific ones, which you can see on that second one, the Digital Security by Design Challenge. Now, those, by their specificity, mean that you're only going to be going up against other organisations that are actually doing what you're doing, but they're far less predictable and are less likely to repeat as well. So it's all about timing with these funds. If you've got the right project and you are speaking to the right people, you know there's a specific call coming up, then it's worth targeting the specific call, because it's going to be less competitive. Not necessarily any less work to win, but there's going to be fewer people applying from other sectors. If that isn't suitable, then you can go for one of those sector agnostic calls like the smart call.
Nice one. Please do kind of message in with the FAQs if you've got any more. I've got one more though for you, Tom, which is kind of how do you prove the ROI on these projects to grant funders? So like, what are they measuring to see whether they've got value for money from their grant funding?
So I think one of the first pieces again comes back to how you construct the project. So one of the things that if you've got a development team of 4 people, for example, working for you, then obviously they've got a salary. But what you're not having to do is you're not having to pay any profit on top of that to subcontractors, for example. It's fine to bring in subcontractors for very specific elements of it, but the funders will not support a project that's entirely subcontracted. Normally, they like it to be around the kind of 30% of maximum of project costs going to subcontractors, because you can say, well, the day rate for that person that's employed is X. If it was the same for the day rate of a subcontractor, it would be more. So that's good value for money. In terms of then the return on investment, that's about doing future forecasting. So you will have to forecast, again, comes back to that kind of hockey stick. You're going to have to forecast into the future the likely return from this particular innovation. But it can be much wider than just yourself. So there's a wider economic impact, there's an employment impact, particularly if you're working with partner organizations as well, then there will be, functionally more positive benefits to the economy than just to your company. One of the other positive things that we're starting to see as well recently are the impacts on equality, on diversity, much more focus on environmental impacts, reduction in carbon, for example. We're going to see a new strategy from Innovate UK being launched, and they're moving there to a situation where there's much more focus on things like net zero, for example. And rather than just our solution is going to stop people from using paper in an office, you've got to really go into the carbon impact of it, how it's actually going to help, to alleviate the problems of the future. So those are the kind of there's much more kind of focus on those wider impacts over the last couple of years than maybe there was previously. Which is a positive, but then there's work to be done behind that to calculate those elements.
Fantastic. Well, I think unless there are any other questions on the floor, we'll look to wrap up there. But if anyone has anything kind of follow up post the webinar, then I'm sure. Well, I'm certainly happy to answer your questions, and I'm sure Tom will be as well. Our email address is on the slide there, and likewise, that QR code will take you to, I think we're going to send out a recording of this as well in case you want to play anything back or hear any of Tom's expertise. So yeah, it really just leaves me to say thanks so much, Tom, for joining us today. And thank you all for coming along. And we look forward to catching you very soon.
Thanks, Harry. Appreciate it.
Cheers, Tom. Bye-bye.
Bye.